Hello, fellow investors. Today I've got an excellent video for you. I'll be diving into the nitty gritty of calculating returns on income for detached properties in Calgary, all under the $500,000 mark. Now, whether you're a first time homebuyer, an investor, or looking to make a savvy move into the Calgary real estate market, you're in the right place. Let me break it down step by step for you. So it'll be crystal clear for you. I'll be looking at key factors like purchase price, potential rental income, and expenses to give you a realistic snapshot of what your return on investment would look like. Now, here's the best part. By the end of the video, you'll have all the tools to make informed decisions on your next property venture. So don't miss out. And if you find this video valuable, make sure to hit the like button. All right, now step one, what we're going to do is we need to figure out what is the income we can get for a property, for a house detached. So my main source is rentfaster.ca. Comment below if you want me to send you a link or any questions you have when you're using rentfaster.ca. What I did was they have a special market report here, and what it is that you can actually figure out what the average prices you're getting for a house. So I will enter a house here, and really doesn't matter what bedrooms it is, bathrooms either. I just want to figure out what's the income I can get for a house here. It's loading it up now as we speak, and it's slow today, but basically you can enter any information you want in to get market reports for rental properties. Okay, here we go. Now for a house, it's saying that the average house rented in Calgary as of October here is $3,213. Highest is 14, lowest is 780 listings, which for a $1.6 million population of Calgary is very low here. Okay, now as you can quickly see how high it's gone. Let me just take a look at 1 year distribution here. It's gone up quite a bit here. So basically, and this is the number of listings, it's gone, and the price range, as you can see here. Comment below if at all you want me to show it. So we're going to use this number to figure out our ROI for properties under $500,000. Now I'm going to use calculator.net, specifically the real estate calculator, to calculate the return on investment now that I know what the potential income is. Now, comment below if you want any more, if you want me to help you using this calculator. All right, we're going to have a purchase price of $500,000 here. Okay, 1, 2, 3. Down payment, we're going to use 20%. That way we don't have to pay CMHC fees. Interest rate is roughly 6%. Might be a little higher, but let's just use 6%. Length, loan term, 25 years. Closing costs, basically that's lawyer costs and small miscellaneous fees. Let's put that at about $2,000. All right. Now, what's asking is the operating expenses, property tax on a $500,000 property. I'll go to the City of Calgary website and comment below again if you want me to show you this, how to use this here. Now, one of the major expenses is going to be the property tax. Since we don't know what it'll be, we can go to the Calgary website and enter $500,000, and it will tell you roughly what the property tax will be. Calculated here, and there it is. It gives you a breakdown. The total taxes will be $32.85.90. So let's write that down, and let's go back to the net calculator page. You can actually go back to the calculator and enter this stuff in. Now, we know the property tax is $32.85. Okay, $32.85. Insurance, we know, well, we don't know. There's an estimate here, but $300 per month times 12, so it should be about $3,600. Homeowner association fees there. Typically, there's none in the areas that we're looking for. Maintenance per year. What I like to do is build up a reserve fund at $2,000 and just leave it in there. And then what I'll say is zero, and that should cover maintenance costs. not major capital costs, but just maintenance costs, such as, there's certain plumbing issues or electrical issues. There should be another other cost as well. Okay, there. Next is we know that monthly income from Rent Faster was 3213. So 3213. That's from Rent Faster we got there, right? Right now the increase is going by 10% in Calgary. We'll leave it at 3%. We could even go higher, but we'll just leave it there. There's no monthly income. You could have such as a garage, or you could be renting out other things there. Vacancy rate, I'm putting at 0. Reason why I say that, I have a strict policy that I will not allow a place to be empty. To sort of determine more tips on do that, go take a look at my video where I show you to have 0 vacancy for 10 years. Now this should be self-managed yourself because it's one property there, and you should be no cost is there. We don't know what price we're going to sell it at, but we know it's going to be roughly, let's say that's the 50-year average of value appreciation. We're going to hold it for 5 years and then decide whether to sell it or not. Our cost to sell should be 3%. Now let's just review everything here. A calculator. This is all our input. Purchase price $500. We're putting $100,000 down payment at 6%. The mortgage loan term is 25 years. Cost to close, mostly lawyer costs. That's going to be, and miscellaneous costs, about $2,000. We don't need any cost renovation. That's our expenses. Property tax we got from the City of Calgary assessment. Insurance, I estimated that. Maintenance, that's a reserve fund and maintenance there. And I put, we're not going to increase in there, okay? Monthly rent we got from Rent Faster, no other income. And we want to hold it for 5 years. And let's take a look at, once we've entered all the information, and we're going to calculate how much profit we're going to make and what's our income. We're going to press calculate here. Okay, we press there. Let's calculate here. There we go. Here's the numbers now. Now, what it's saying, the major thing here is that after 5 years, you will have a profit of $77,000. So you put $100,000 into the property. That's your down payment. In return, you're going to get, on top of that, you're going to get $77,000. That basically is saying you're getting a 75% return on your property. Your cap rate is basically, it's basically at the minimum. I like to go from 5 to 8%. 8% is just amazing cap if you can get that. Income over 5 years, this amount, mortgage payments there, your total expenses there. Now, net operating income is basically income versus minus expenses. It does not include the mortgage payments. That's what you're going to get. Okay? Net operating income. That's really variable. So that shows you that's a healthy return. Okay? In your first year, you're going to have $38,000 income. Now, this is important here, mortgage payments. When I look at income here, my mortgage payments is my future income. So if I take out payments here, I'm going to be netting. I'll be grossing $38,000. That's the way I take a look at long-term investments. Everything else is entered properly here. Now this is interesting. You're going to lose. You're going to have every month. You're going to it's going to be a negative $104 for the first year. I used to basically abandon these properties. I don't do that anymore, just because of the growth of Calgary and how rare it is to get properties detached at $500,000. Okay, net operating income it doesn't include the mortgage payment, so you do have a positive result there. Done. Now, when I take a look at over the 5 years plan here, what it's saying is that yes, you're going to lose $1,200 in the first year, $300 in the second. After that, you're profiting, mainly because your mortgage payments are going down there. So now I look at real estate a different way because things have changed. I will purchase. This is a purchase property here. Okay, mainly because just of the growth here we've never had before. These are all the variables that we put in there, and this is the end result. So this passed phase 1 of the property results, and then after that we'll take a look at phase 2. Again, comment below if you have any questions about this sort of properties, or you want me to check a property out for you. And please remember, this is for educational purposes only.